Hi there, Serial Trader here. Let's check in with the major US indices, and we'll start off with SPX. Alright, so that equality relationship from yesterday's video and that low that we had at 28.85.13, that didn't prove to be the ultimate low here. And so this is developing a little bit more complexly. So was working a double zigzag. I think now it'd be more appropriate even to label a potential triple zigzag here. And well, we have our W, X, Y, X, Z. Okay, just drop the degree down here. Should be good. No, not micro. Sub menu, it should be good. Okay. So there we go. So W, X, Y, X, Z. So 3 zigzags joined together. And that's potentially for this, still this larger wave 4. Now I'll point out that we just didn't even quite close the gap here that we had. Although very close. We could essentially call that a gap closure. And importantly, we didn't overlap with this high here, which was at 28.73.23. So if this is a 1 and this is a 2, we get a 3, 4. 4 didn't overlap with 1 under that interpretation, so that's good, and we didn't even quite close the gap, so also quite healthy to close the gap. So I would like to see this really reverse almost immediately at this point. Otherwise, we could be working a larger degree pullback that goes quite a bit lower, although I'm still very much in doubt of that. So the stop I had on the futures, if we look to the futures, I believe was right here. 20. Let's see the level I had. 28.85.50. So yeah, the stop I had was 28.85.25. So the stop got triggered. Now we had an initial little flush down in the futures, although it just couldn't stay down. It came right back. So when I saw that, I got back in, and also I saw this on the futures here, kind of a bullish divergence on hourly RSI. So hourly RSI made its actual low over here, and yet we made a lower low in price, but a higher low in RSI, so bullish divergence. So I like that. I like that we really couldn't get out of this channel in any meaningful way, and now we're back above this lower boundary line. So I got back in, and actually a slightly lower price than what I got stopped out at. And at this point, my stop is now just below the low here at 28.77.50. So the low, sorry, my stop is 28.77.25 on the futures. So we'll see how that works out. I don't mind being stopped out a few times to try and catch a good pivot. It's still important to have the stops. You might say, well, why have the stops in the first place if you're going to buy back in? Well, there's a reason for that. So say you get stopped out here like I did, and this just falls out of bed and just keeps going down. Well, obviously, that's why you have the stop. But the thing is, you observe after you get stopped out what happens, and then decide, hey, I can get back in here. So I did that. Got stopped out. Saw it starting to come down, but then saw it reject, and then basically stay roughly where it was. And it really didn't break down in any meaningful way. So that was reason for me to get back in, and now just have a new stop down here. But still very important to have the stops, especially on the futures with the leverage involved, because say your stop gets hit, and it doesn't just have a false little breakdown here, it just really pours down, and you have a 30, 40, 50 point drop or more. That's huge on the futures. So that's still why you have the stop. But the stop is a tool, and then when it gets hit, you reassess. If it still looks good, you just get right back in, have a new stop. That's how it works. At least that's how it works for me. So that's a little explanation on that. So yeah, definitely on SPX here, liking the potential for the triple zigzag, small degree wave 4, and that we're going to, hopefully tomorrow, as soon as tomorrow, start launching up here in our fifth of a potential third. Although, of course, this is subject to change, but so far the short-term structure is cooperating with this interpretation, so we'll go with it. Now, we'll go to the candlestick chart. So SPX daily, you can see just came down, not even quite closing the gap. So the high of this level before the gap was 28.76.16. We went as low as 28.76.92. So less than a point to closing the gap, but didn't actually close it. So basically the gap is serving as some support here. The next kind of logical support level might be down here. The most recent little dip down, which was 28.54.03, and then obviously we have this 20-day simple moving average coming into play, which could offer some support, although ideally it had its low today, but we'll see. And largely, so we got below the T-line intraday, but largely closing basically on the T-line. So still can't really get below the T-line in a meaningful way, so that's kind of some underlying strength there as well. And again, another potential little bullish hammer reversal. Long lower shadow, and then the real body is the hammerhead here. So we'll see if this can produce a bullish reaction. And I also like that, okay, today was the second trading day of the month. So again, within the first, sometimes the very first, but often within the first few trading days of a month, you definitely see a nice pivot. So still looking for that as well. Okay, so Dow Jones Industrial Average. Let's have a look at that. Now, I think the Dow was actually a standout today in that it actually had a just slightly positive day, basically closed flat. And if I'm not mistaken, no, it didn't do a bullish engulfing, but definitely still a positive day and a close above the T-line, okay? So Dow showing some relative strength compared to the S&P and certainly the NASDAQ, which we'll get to here. So it could be a little sector rotation out of tech into some of the industrial names, which has certainly happened before. Now, NASDAQ Composite, definitely the weakest of the three indices today, and we did close below the T-line, although a little bit of a dip buying near the end of the day, so a bit of a lower shadow there on the candlestick. And we might still come down a little more, maybe test the 20-day simple moving average, and below that, below that is obviously the channel that's been offering support up on the way here, and then after that's that 50-day simple moving average, and then obviously after that is the previous pullback level. Although I'm not convinced here that the NASDAQ's ready to roll over just yet. It has to really get below that T-line and start trending down in some sort of meaningful way before I can consider, oh, maybe we got a pretty significant peak here. So definitely on watch for that, but still not convincing as of yet. I need more than 1 day of weakness to really get that in place. All right, on the VIX, is this giving us any clues? It doesn't really look like it. So despite a little bit of market weakness today, the VIX really not breaking up in any kind of significant way. And again, very much still within its low range here. So no red flag still from VIX. All right, we'll check in as the week progresses. Serial Trader signing off.